The debt settlement truth that credit repair companies hide. You're drowning in $30,000 of credit card debt, and a company calls promising to settle your debt for 40 cents on the dollar. Sounds like a miracle, right? Wrong. What they don't tell you is that debt settlement destroys your credit for 7 years, creates taxable income on forgiven debt, and you could have negotiated the same deals yourself for free. I'm about to expose the debt settlement industry, show you when it actually makes sense, and give you the exact script to negotiate directly with creditors and save the $3,000 to $5,000 in fees these companies charge. What debt settlement companies actually do. Debt settlement companies market themselves as saviors. They promise to negotiate with creditors and reduce your debt by 40% to 60%. Here's their actual process. Step 1. They tell you to stop paying your creditors. This tanks your credit score immediately. Late payments, charge-offs, collections. Your credit gets destroyed. Step 2. They have you send them monthly payments. Instead of paying creditors, you pay the settlement company. They hold this money in an escrow account. Step 3. After 6 to 12 months of non-payment, they negotiate. Once your accounts are severely delinquent and in collections, they contact creditors offering lump sum settlements for 30% to 50% of the balance. Step 4. They take 15% to 25% of your enrolled debt as fees. On $30,000 in debt, they charge $4,500 to $7,500 in fees, even though you could have done the same negotiation yourself. The entire process takes 2 to 4 years, destroys your credit, and costs thousands in fees for something you can do yourself. The credit score destruction. Here's what debt settlement does to your credit. Months 1 to 6, immediate damage. Multiple 30-day, 60-day, 90-day late payments reported. Credit score drops 100 to 150 points. Months 6 to 12, charge-offs and collections. Accounts get charged off, written off as bad debt. Sent to collections agencies. Credit score now 450 to 550 range for most people. Years 1 to 7, long-term damage. Settled accounts show as settled for less than full balance on your credit report. Collections, charge-offs, and late payments stay on the report for 7 years. Difficulty getting approved for mortgages, car loans, apartments, and even jobs. Debt settlement companies downplay this. They say your credit is already bad, but they make it exponentially worse. The taxable income bomb. Here's the part debt settlement companies barely mention. Forgiven debt is taxable income. If you owe $10,000 and settle for $4,000, the $6,000 forgiven amount is reported to the IRS as income. You'll receive a 1099-C form. Real example. You settle $30,000 in debt for $12,000. Forgiven amount, $18,000. You're in the 22% tax bracket. Tax owed on forgiven debt, $3,960. So you thought you saved $18,000, but you owe nearly $4,000 in taxes. Plus, you paid $4,500 to $7,500 in settlement company fees. Net savings, $18,000 minus $3,960 minus $6,000 equals $8,040. You could have negotiated yourself and kept the $6,000 in fees. When debt settlement actually makes sense. I'm not saying debt settlement is always wrong. There are specific situations where it's the right option. You're facing bankruptcy. If you're about to file Chapter 7, debt settlement might be a better alternative that preserves some credit. You have no income and can't make minimum payments. If you're unemployed or disabled and truly cannot pay, settlement might be your only option besides bankruptcy. You have lump sum cash available. If you inherited money or have savings, you can offer creditors 40% to 60% cash today to close the account. Creditors prefer this over chasing you for years. You're being sued by creditors. Once lawsuits start, settling to avoid judgments makes sense. But if you're still employed, making some income, and just overwhelmed, there are better options than settlement. How to negotiate debt settlement yourself. You can do everything a settlement company does, but for free. Here's the process. Step 1. Stop paying the creditor. I know this sounds scary, but it's the same thing settlement companies do. Creditors won't negotiate until you're behind. This will hurt your credit, but settlement was going to do that anyway. Step 2. Wait 90 to 120 days. After 3 to 4 months of non-payment, the account will likely go to collections. This is when creditors are willing to settle. Step 3. Save money during this time. Instead of paying the creditor or a settlement company, save every dollar you can. You'll need lump sum cash to offer. Step 4. Contact the creditor or collection agency. Call and say, I'm experiencing financial hardship and cannot pay the full balance. I have amount available right now as a one-time settlement. Will you accept this to close the account? Step 5. Negotiate the percentage. Start low. Offer 30% to 40% of the balance. They'll counteroffer. Settle around 40% to 60%. Step 6. Get it in writing before paying. Never pay until you have written confirmation that ... This settles the account in full. No further balance is owed. The account will be marked settled or paid in full. Try for paid in full if possible. Step 7. Pay by check or money order, not bank account access. Never give collection agencies access to your bank account. Send payment by certified check with tracking. This process works and saves you thousands in fees. The exact negotiation script. Here's what to say word for word. Hello, my name is Name, and I'm calling about account number. I've experienced significant financial hardship due to job loss, medical bills, etc., and I'm unable to pay the full balance of amount. I've been working with a financial advisor, and I have 40% to 50% of balance available right now as a one-time lump sum payment to settle this account in full. If you can accept this amount and close the account with no further balance owed, I can make payment immediately. Can you accept this settlement offer? If not, what amount would you accept to close this today? Be calm, polite, and firm. Collection agents deal with angry people all day. Being respectful and businesslike gets better results. My client's $14,000 DIY settlement. I worked with a client, Marcus, who had $28,000 in credit card debt across 3 cards. A settlement company wanted $5,600 in fees. I showed him how to negotiate directly. Card 1, $12,000 balance. He offered $4,500 after 4 months of non-payment. They countered at $7,000. He settled at $6,000. Saved $6,000. Card 2, $9,000 balance. He offered $3,000. They accepted $3,600. Saved $5,400. Card 3, $7,000 balance. He offered $2,500. They accepted $3,200. Saved $3,800. Total saved $15,200 in debt reduction. Paid total $12,800 instead of $28,000. Settlement company fees avoided $5,600. Net savings $20,800 compared to using a settlement company. Same result, but he kept the $5,600 in his pocket. Better alternatives to debt settlement. Before considering settlement, explore these options first. Balance transfer to 0% APR card. If your credit is still decent, transfer balances to a 0% card and pay aggressively during the promotional period. Debt management plan through nonprofit credit counseling. Organizations like NFCC negotiate lower interest rates and monthly payments without destroying credit like settlement does. Debt consolidation loan. If you qualify, consolidate high-interest debt into a single, lower-rate loan. Your credit stays intact. Negotiate directly with creditors for hardship programs. Many creditors have hardship programs that lower payments and interest rates without settling for less. This doesn't destroy credit. Bankruptcy in extreme cases. Chapter 7 or 13 bankruptcy might be better than settlement if you truly cannot pay. It's more comprehensive and legally protects you. Settlement should be one of your last options, not your first. The for-profit versus non-profit trap. Be careful who you work with. For-profit debt settlement companies charge 15% to 25% of enrolled debt in fees. Aggressive marketing and sales tactics. Many have FTC complaints and lawsuits. Examples: National Debt Relief, Freedom Debt Relief, Accredited Debt Relief. Nonprofit credit counseling. Charge little to no fees, maybe $25 to $50 monthly. Offer debt management plans that preserve credit better than settlement. Examples: NFCC members, American Consumer Credit Counseling. If you need help, go nonprofit. For-profit companies are driven by profit, not client outcomes. What to do this week? If you're considering debt settlement, calculate the true cost: fees, tax on forgiven debt, and 7 years of credit damage. Compare this to alternatives. If you're already enrolled in a settlement program, review your contract, calculate total fees you'll pay, and consider doing the rest yourself. Research nonprofit credit counseling through NFCC. Get a free consultation to explore debt management plans. If you decide to settle yourself, make a list of all debts, balances, and interest rates. Prioritize which to settle first. Save aggressively for 3 to 6 months to accumulate a lump sum of cash for settlement offers. Only stop paying creditors if you've exhausted all other options and you're committed to settlement or bankruptcy. If you found this valuable, hit that like button, subscribe, and ring the notification bell. I drop new finance strategies every week that most creators won't tell you about. Also, visit Own Your Finance blog for more in-depth financial tips and hacks. Whether it's debt elimination, settlement strategies, credit repair, and more. Don't forget to download my free guide, Finally Break Free from Living Paycheck to Paycheck, the simple 10-step budget that actually works, and start building real wealth today. Don't miss it. Thanks for watching and have a great day.